We are excited to have Nishino America as our title sponsor for 2026. Nishino is driven by ingenuity and R&D, bringing innovative chemistry that works. They back every product with a customer-focused expert who knows your field and is ready to help. Stop guessing and find solutions today at www.nishino.net. Thanks again for Nishino for sponsoring the show and this episode of the Specialty Cropcast.
Welcome to the Specialty Cropcast on Pomes and Stones. Join us for real conversations with farmers, agribusiness owners, and industry experts as we dive into farming, products, and the business of agriculture, all from the people who know it best.
All right, everybody, welcome back to the next episode of the Specialty Cropcast. Let's look around the room. To my right,
New face.
we have a new face to my right. Bruce Veliket.
Yep.
Guest one on the show is filling in for Backward Hat Steve. He's out of town this week. He can't be with us, so we have Zach in the corner as always.
Yep.
Good to see us. This episode, we are going to talk about risk, federal crop insurance, and what growers need to understand heading in unpredictable seasons here in northern Michigan. So we have Cory Blumerick from Greenstone to come talk to us. How are we doing?
Nice to be here, fellas. I'm doing pretty good.
So what's your position at Greenstone?
So at Greenstone, I manage a team of crop insurance agents and processors that just focus on specialty crops here in Michigan. We've also got a few counties in Wisconsin that we work with specialty growers over there too. And then there are other teams at Greenstone that focus on commodity crop, row crop, and then we've got a livestock team too. So pretty specialized.
Okay, so let's learn a little bit about your past that helps you land into, or what makes you qualified to fit this position to help specialty crop growers.
Sure. So I was born and raised in northern Michigan, went to Glen Lake schools, and gosh, seems like half of the people out there at Glen Lake were farmers, right? At least used to be. As we all know, farmers and farming families are disappearing from northern Michigan as well as the rest of the country, but it seems like so much of our school had to do with ag. Luckily, we had a career tech center here in Traverse City that had an ag science program, so I attended that in high school. Then went on to Michigan State's ag program for a couple of years. Just always had a kind of a desire to learn more about horticulture and agriculture. So
what did you do some college after that, and what did you study?
I did. So I transferred out to the University of Hawaii, which was a big move, but I was ready for some a decent change. I love Michigan, loved Michigan State, but I wanted just to open my horizons a bit. So I went to the University of Hawaii for 2.5 years to finish up my bachelor's and got it in tropical plant and soil science.
Tropical plant.
Correct, yeah. Amazing university. It's a land grant university, just like Michigan State, very ag focused. So I was there. I worked for the Department of Nematology at the university out there. So during school, I worked to try to pay some of that out of state tuition. So with them, essentially, we had a nematode farm. We raised nematodes to inoculate into pineapple fields, tomato, coffee operations out there, and then use different treatments on them. So it was both beneficial and then detrimental nematodes. But it was fascinating. Never thought I'd be into that at all.
Was there much of that research on the island that transferred to the States?
Just when I was finishing up, we were starting to get into some corn research. When I was leaving, the top commodity grown in Hawaii switched from kind of a pineapple sugarcane mix that switched to seed corn. So Monsanto and Syngenta, they were the largest farming operations out there because they can grow 2 or 3 crops a year.
Right.
So a lot of my college buddies out there, they went to work for them. And I think by dollar wise and acre wise, it's probably still the largest commodity in Hawaii, which is interesting.
It is.
That brings its own issues too. So
what was the most interesting crop that you were part of out there? Was there something about pineapples that you were like, wow, I didn't realize that's how that was produced, or harvested?
Yeah, I think probably pineapples. we did the research from the greenhouse all the way out into the fields up on the North Shore. And my favorite part was just going out, doing the research, and then eating a sun-warmed pineapple. But just it was such an integral part of Hawaii's history, right? Hawaii is such a melting pot of Asian, Polynesian cultures, and a lot of them came over to work on the pineapple plantations. So just the cultural aspect of pineapples and sugarcane and everything in Hawaii, though the ag side is decreasing on those commodities, the culture that got created because of them is still there. So it's very interesting.
Do you know what the acreage is like out there for those crops? Like what's left?
Gosh, there's probably, my guess would be less than a couple thousand acres of pineapple. But we're seeing an increase in coffee. We're seeing an increase in macadamia nuts. Those are macadamias are mostly on the Big Island. Papayas are I think doing pretty well once they fixed a virus out there. There's also kind of a resurgence of, after COVID, there's a resurgence of Hawaii being more sustainable in growing its own food. I think 85 to 90% of the produce is brought in to Hawaii. During COVID, that kind of all dried up a bit, which is very dangerous.
Right.
So there was a company called Mahi Pono on Maui. They took over about 40,000 acres of old Maui land and pine land, of sugarcane and pineapple, and they are growing citrus and watermelons and supplying the Costco's on the islands, and they're really making a big move to make an impact there on just providing local sustainable produce.
Oh, so it's cheaper to grow it there than it is to ship it in.
Yes. Well, yes. Getting there. I think there's a lot of state help there as well that makes it a little bit more feasible.
Right.
But it's nice to see because ag needs to be a big picture of Hawaii. There's a lot of big military presence. There's tourism. Ag was disappearing. Hopefully we get that in again, but they need to diversify their economy a bit more than military and tourism.
Yeah. You were just on vacation in Hawaii.
I was.
Did you see any of that out there?
I did not see any ag out there, but it seems like it did pick up that the local culture is wants to be independent, wants to not be so dependent on the mainland and or the outside pressures, I guess. So I can totally see how they're trying to be more self-sustainable on the island and grow more produce. That makes a lot of sense.
Yeah. A big the Hawaiian history is so connected to the land.
Yep.
So taro is like a family member, right, out there. Taro was their starch. It was their kind of would help them to be that was like their main form of sustenance, right? They got the taro, and then they got everything from the sea too. But their taro was their starch. They considered it like a family member, so they're so tied to the land, and it's nice to see a resurgence and kind of a more focus on that. So I'm glad you picked that up while you were out there. Yeah. That's important.
Didn't communicate with a whole lot of locals.
Sure.
But just seems to be the sense I picked up with the little bit of conversations and stuff.
So what kind of, or how does your hands-on approach working, with the university out there transfer into crop insurance out here? How'd you land at Greenstone, or was there a job in between that kind of bridged the gap between ag on the island to working a desk job?
Yeah. So I out there in tropical plant and soil science, I got into a focus of more landscape nursery. So I worked for a landscaping company out there. There's an incredible amount of that with the military housing, with hotels, with residential. So I got into that, got into irrigation. Eventually left that, started working for an irrigation company out there, and managed one of their warehouses. And within that role, that's when I really started working with farmers out in Hawaii, selling, drip tape and all their irrigation needs to grow the crops out there. So that was my, prior to that, was more focused on the landscape nursery side, and then got into the ag side. So I met my wife out in Hawaii, and we were there for, she's born and raised, she's multi-generational, and her ancestors are tied to the pineapple plantations as well out there. Came over from the Philippines many generations ago. So I met her. We fell in love, of course, right?
Oh.
Could you not?
Yeah.
But there were so many aspects. Hawaii's a very expensive place, right? And there's not a whole lot of space, opportunity, et cetera. We thought it would be the best for our little family to kind of come back to Michigan, raise her. We've got a little daughter, so raise her here. Well, my wife's actually back in Hawaii right now, so we still try to go back there a lot. All her family's there. But so we wanted to kind of make the move. And in that, I just started searching up green industry jobs for Michigan. You know, I could have went the landscaping side, the ag side, and farm credit came up, Greenstone, looking for a crop insurance agent for this area, which was perfect. You know, I knew a lot of people in this area. My family's here. It just makes sense to kind of be here. My first job was on a cherry farm picking, you know, sweet cherries for $2 a lug, and kind of cut my teeth doing that when I was 11 or 12 years old. So kind of always had a passion for Northwest Michigan, and to be able to help growers out a bit was something I was on board with. So we moved with a job in hand. So we moved back here, and a week later I started.
Nice. How long have you been in Greenstone?
12 years now.
12 years.
Yeah. Time flies.
How much has the crop insurance industry changed over those 12 years?
Ooh, so much, an insane amount. If we look at just specialty crops, we've probably doubled the amount of, you know, revenue that we're covering in the last 10 years, due to a number of factors, more education to growers, more, you know, better policy options out there, better straight policies, more awareness. It's been great to see. I think everybody's benefited from food security to, you know, the RMA's crop insurance program as a whole has benefited from, you know, more people buying in. It allows them to kind of spread their risk out a bit more. So yeah, it's changed quite a bit for the better.
That's good.
Yep.
The volatility in the specialty crops in Northern Michigan is, as far as crops go, is, you know, the crop insurance is almost a necessity.
Mm-hmm.
You know, can't remember the first year our farm bought insurance, but it was, you know, one of those things where we've never had this. It's expensive. Is it worth it? And I'm guessing that crop insurance has been able to keep a lot of growers in the business just with how volatile the crops have been the last 15 years.
Mm-hmm.
So I don't know if you're seeing something similar to that, or if that why it's growing so much, because there that many more people are participating because of the volatility, in your opinion, or what are you seeing? What's drawing more and more growers into it?
Volatility is definitely an aspect. The tart cherry policy came out in the early teens, right? So before that, it wasn't even an option.
Right.
So 2012 got it on everybody's radar. We need something.
We
for
had
tarts.
1% of a crop in 2012 with no crop insurance.
Yeah. So, and that was brutal to sustain one more year like that. We probably wouldn't be sitting here right now.
Yep.
So the quick implementation of that TART policy, and we had a lot of people on board with that, right? Extension, Stabina, the grower group got together. It all came together very quick and got that pilot program in place. So luckily, because we've had some pretty brutal years since then.
I don't know if that's luck or not. I prefer not to have the brutal years. Nobody makes money, you know, on insurance.
Yeah,
for sure. Farming insurance doesn't pay the bills, but it helps keep the lights on.
Mm-hmm.
Yep, absolutely. So yeah, the buy up has been, you know, like I said, policy improvements, right? We, as far as cherries go, here just a few years ago, we had a beneficial policy change. I think prior to 23, all processing sweet cherries were just a processing sweet cherry, right? But you guys know that we've got canners and briners, much different risks, different markets, different, harvest times. So we worked with grower groups and worked with RMA to get those into separate insurable types. So now it's even more effective, and we got to really keep a close pulse on making sure that the program and the policy keeps up with the new risks that you guys are facing, right? So if there's a new insect, a new, import issue that's affecting your revenue, we got to keep in close contact from from RMA to extension to growers to crop insurance agents, we all need to be talking a lot more and making sure that as soon as we hear of a new risk, that we can work with RMA to see if we can get that as a covered peril, right? And make sure that the rates and everything, going forward are sustainable for you guys and sustainable for the program itself. So
You've mentioned RMA a couple times. For those out there listening that don't know what that is, you go ahead and explain that.
Yeah, so a quick overview of the crop insurance program. It's federal, kind of a public-private partnership. Okay, so when I say public, it's a USDA agency. RMA it's called a risk management agency. They're the ones that come up with all the ratings, the rules, the policy provisions for crop insurance policies. Okay? And then they're sold and administered through AIPs, which are authorized insurance providers. So those are the insurance companies. And then those are kind of serviced through independent agencies like Greenstone, like Farm Bureau. There's a lot of them around in Michigan. RMA has a great website, and they've got an agent locator. So no matter where you're at in the country, you go to that agent locator, you can get a whole list of agents that are in your area. So beneficial. The cool thing about the program, it's all the exact same price that growers pay, exact same rules, no matter what agency you're with. Okay, so that's the easy thing. It's not like you can shop around and get better rates. It's a federal program. You're going to pay the exact same no matter who you go with. So, so that's kind of an overview of the program. And then there's also the FCIC, Federal Crop Insurance Corporation. They kind of vote on the rules that get set. Like, say there's a new policy that gets brought up for, say, strawberries. Everything gets brought to them, and then they work through to see if it's going to be a viable product for the program. So, and we've recently had some change on that, but that corporation does have a specialty crop grower. There's a mandatory position on that board to have a specialty crop grower. So at least the specialty side's voice is heard.
So prior to 2012, there was no crop insurance for tart cherries.
Just sweet cherries.
Just sweet cherries.
Yeah, the only thing available was a different form of insurance through FSA called NAP.
Okay.
And that's kind of a different, still FSA, Farm Service Agency, is another agency of the USDA. They have a NAP program. It's non-insurable assistance program. That's available for crops that don't have a federal crop insurance policy, which is the main ones that we have now.
Okay.
So if you had carrots grown in Antrim County, there's not a federal crop insurance policy for that, so you can go get NAP coverage on it. Strictly a production-based policy through FSA. They do have a buy-up. The highest you can go is 65%. So if you fall below 65% of your average, pounds per acre.
All right. So what are some different ways that farmers can insure their properties and their crops?
Seems like every year there's more and more ways, which is a good thing. Prior to 2015, it was individual crop policies. A lot of our main specialty crops had them. Apples, cherries, blueberries, peaches, grapes. They all had somewhat of a decent policy. In 2015, a whole farm revenue protection came around. Just gives you an umbrella revenue guarantee on all the crops that you grow under that tax entity. Okay, so they mainly established that for diverse growers that didn't really have access to good crop insurance policies, because under that you can insure anything. You can insure your carrots and Antrim. You can insure your asparagus. Anything that's currently uninsurable now became insurable. So that came around, 2015. Some decent uptake to it. Very heavily subsidized, whereas the government's paying 80% of the premium for up to 75% coverage. Growers on the hook for the other 20. So for beginning farmer ranchers, there's even more subsidy applied. So beginning farmer ranchers only pay 10% of the premium. Taxpayers, government pays the other 90. So it fit well for a lot of growers and still does. And every year there's changes to that program. So every year, what your guarantee will be can shift pretty dramatically just based on how we come up with those, come up with your guarantees. Pretty much every policy, there's a few that are area based, rainfall policies, but most other policies are based on each farm's individual history. Okay. So they're pretty accurate to what your, ensuring a percentage of what your farm can,
Your production, what you've been paying.
correct.
In the past.
So cherries are a 10-year revenue history. So it goes off revenue per acre for the last 10 years, and you can insure a percentage of that revenue from 50 to 85% of that. Of course, the higher you go up in coverage, the more that you're going to have to foot the bill because there's more of a risk of it paying, right? So the government's saying, hey, that's going to be too risky if you go up to 85%. So instead of us paying 67% of the premium, we're only going to pay 40% of it or whatever that number would be. So each year those kind of change. So more likely for it to trigger, growers on the hook for more of the bill.
Are there ways to insure your farm via farm or entire countywide? And what's the advantage of doing it one way or the other?
Yeah,
Different
so
units.
crop insurance policies go by crop and county. So if you take out a cherry policy for Grand Traverse County, all cherries in that county, and so there's a separate tart and a sweet policy. If you just take a tart policy, you have to insure every acre of tarts in that county. Okay, but there are different options where you can, if those farms are separated by non-contiguous land, you can insure those as separate units. Okay, those are called optional units. Or you can put them into an enterprise units, which combines the whole county into one unit, and you get a big discount for that, right? Because it's less likely that two farms that are separated by a couple miles are going to fail, right? So the government's saying, hey, less risky, we'll give you a discount on that. But if you want to separate them out into optional units, you're going to be paying a bit more because there's more of a risk of one of them failing, the other one doing good. So
what determines a grower's premium?
Every crop in every county has individual rating. Okay, so and different coverage levels have different subsidies applied. So there's it's called the Actuarial Information Browser. It's a fun place to mess around with if you guys are bored, but it's on the RMA website. It goes through every single crop and county in the U.S. and talks about the rates of each of them. So it's important to definitely get stuff quoted as accurately as you can because rates can fluctuate significantly from Grand Traverse County down to Oceana, down to Newaygo. The more that counties have losses, the higher the rates are going to be. But sometimes they don't update them for 3 or 4 years. So it's not like it's something that's going to be felt the following year of a massive loss. It may be felt 2 or 3 years down the road.
Like auto insurance. The more it's used, the more expensive it is.
Yeah, for sure. But it's not on an individual basis.
Yeah.
It's on the county as a whole. Yep. So luckily it's not kind of loss rated per farmer because that would be, the whole why this program's so successful is that you guys all kind of share it in the losses based on the rating that you pay. Yeah, good way to diversify the program, keep growers in the program, even though they may have, more losses than their neighbors. So you guys are kind of sustaining each other through this program a bit.
When does coverage actually begin for an orchard? When does a farm become eligible?
That depends on the crop. A lot of our specialty crops have minimum production requirements or age requirements that need to be met before it becomes insurable. So tart cherries, once they hit 3,900 pounds per acre, they're insurable the next year. Apples, once they hit 150 bushels per acre, they're insurable the following. Peaches are leaf year. Once they hit 4th leaf year, they're insurable, no matter if they've met production minimum requirements. So it's interesting.
Why does it do that?
That's a good question.
What do that?
That was a lot of stuttering.
Hey, it's all good. That's a good question, and it's one of our asks of RMA that we do get insurability by leaf year. So if you think about it, let's say you have third leaf block of Honeycrisp, right? Very valuable crop. You've got $80,000 per acre into it, right? Probably 100 by the time it's third leaf year. If there's a frost event, then you don't have a crop. That's one more year that you're not going to.
Yeah.
So that's
what I was thinking. If you have multiple frost out on a cherry block,
right,
and then that orchard could be 8 or 9 years old by the time that
correct
you actually get a crop, then all of a sudden you're missing out on multiple years worth of insurable crop.
Yeah. So I think the more data that we gather from growers, the more data that Michigan State and other universities gather about average production per leaf year, we may have enough to for RMA to substantiate, yes, that on an average, a third leaf at this density should be insurable. And if there's an insurable cause that makes it not, like a frost event or a drought or something like that, we'd like to see that kind of stuff be covered. So there's kind of always improvements that that we hear from the grower industry that we take up to RMA. And luckily, RMA has been all ears for quite a while. For most of the time I've been with Greenstone, they want to hear what's going on. They want to hear what's needed to make these programs more viable, more sustainable for the growers. Because if the policies work for the growers, they're going to buy into the program. And the more growers RMA gets into the federal crop insurance program, the more the risk is spread out, right? So it's a win-win for everybody. So things like that, just leaf year, can be monumental, especially if you're talking for a beginning farmer rancher. Say, I don't have a farm. Say I planted a 10-acre block of Honeycrisp. I want to get into farming. If I got frosted out one year and then hail the next year, now I'm 5 years out before I can even get them covered. And I'd like to see that change, because I would be out of business at that point. So there's too much risk. We want more people getting into farming. I think it's to the benefit of taxpayers and to the government to try to protect them.
Is there any crops that get like risk mitigation discounts for tart cherries? If someone's using frost protection, is there any in that scenario, or is there any other crops that have any sort of discounts for any, like, just on their practices that they're doing on the farm to prevent crop loss or damage? Is there discounts on that?
It's funny. That's probably the request for policy improvement that we hear the most, and that we typically, in our annual asks to RMA, typically have that in there for frost fans, for hail netting, things like that, for overhead irrigation on blueberries to protect them. But nothing yet in terms of discounts. I would probably attribute most of that to data. Right now, there's nowhere to capture in the policy what acres are protected by frost fans and which ones aren't. So we can probably get word from Michigan State saying, hey, this is, or even like Windwright or some of your wind machine companies. I can't remember the names of them, but
Orchard Right.
Yeah, Orchard Right. There you go.
Chinook.
Yeah. So I'm sure they have data, sales data, and hey, you put in this $50,000 fan, this is going to be a return on, when it goes below 25 at this date, et cetera. None of that transfers right now onto your policy. So I think first step is gathering the data, making sure that it's sound data, whereas RMA trusted enough to change the rating for it. And I just don't think that's there. Yeah, gotcha. But it's a conversation that we need to continue to have, because it's at $50,000 a pop, then it costs you a lot of money to run those, right? Whether they're diesel or propane, the time spent. Yeah, there's a big investment that you guys do.
How much gas do we go through when we run our fans on average?
I mean, it all depends on
how many events we have, but
events and how long. But if when we were running 70 machines, we could burn through 3,000 to 4,000 gallons a night, depending on how long you run them and if they're all running. But that's some of our old technology, gasoline powered machines. But the new, we have a lot of propane powered Chinook frost fans, and I think those go through about 12. I want to say 10 gallons an hour, but I don't remember off the top of my head. So it all depends on runtime. They're not free to maintain, and they're definitely not free to run. It's like you said, if you have a $30,000 or $40,000 machine that goes in theory, they protect maybe 15 acres, And, so if you have X amount of machines per 40-acre block, is there potentially a discount, on your premiums? So it's glad that other people have brought it up, and it sounds like it's more data is needed. But
Yeah.
And you also have, row crop stuff. If their guys are irrigated versus non-irrigated, if there's discounts for, if there's drought, if guys have no rain and their crop is gone, is the guys that are irrigating get a discount or not?
There's different ratings for irrigated and non-irrigated, different crop ratings for risks there. Yep. And thinking, just playing devil's advocate here, if you get a discount on a frost fan protected orchard, okay, so you get a discount on that, but say there's still a frost event that damages the crop, would they consider that not to be an eligible cause, right? So if you...
I don't want the discount if that's the case.
Correct. Yeah. So because sometimes there's not an inversion layer to pull from, there's so many variables, right?
Yeah, absolutely.
So it's a tough one, but I get it. When growers ask for it, I think it'd be nice to have it in there, but not at the expense of maybe making perils not covered at that point. So
how would you check that too? If you said, this farm, would they have to send somebody out to go visually check to make sure that you have frost fans on that farm for anybody that claims that there's a frost fan?
Likely.
Imagine the legwork.
Likely, yeah. Luckily, we've got very good, aerial imagery, and we can pick out where the frost fans are in orchards.
Right.
So, and then it'd probably get to the point to where you needed to prove that you ran it, on those nights. But I've had growers. I don't know what your record is, but over 30 days and over 30 nights in a row of running frost fans, and the expense is just unreal. Mm-hmm. Other growers are lighting fires, right? Burning bins and stuff in the rows. There's been some, helicopters that have been rented out to fly over orchards. But when you're talking about a, revenue of, $40,000, $50,000 an acre that could be lost in a single night, you need to do whatever you can to mitigate that.
Right.
So
one of my favorite ones is the grower up the road who has the fans and he lights little fires in the trailers and pulls them through the rows. Those are always fun.
I like it.
Anything to put in heat.
I'd like to see a video of that. I haven't seen that. Another one was hail cannons. I don't know if you've kind of seen those. Yeah. So kind of another fascinating risk mitigation tool.
Right.
But
so I'm assuming frost is the most documented or most claimed issue.
I think, and when it gets to the specialty side, yes. Commodity crops have great revenue policies where it's capturing an expected revenue on the front end. If the revenue falls come harvest time, there can be revenue losses there. So on a commodity crop side, it could be drought or revenue decline are the main things. But specialty, we've got probably frost is the most prevalent peril. Unfortunately, hail has been
on the rise,
becoming more and more frequent and damaging some really high value crops. So that's been tough to see. You guys are well aware in this area too. But down on the ridge in Belding, Southwest Michigan, we had a hail. Gosh, what was the date last year? June. Yeah, it'll come to me. But there was damaging hail from Berrien Springs to the ridge all the way up here all on the same day. I don't remember ever seeing that before. So, but some of our growers have gotten hit by hail 3 out of the last 5 years, damaging hail. So it's kind of getting into some interesting weather patterns.
So if an apple grower has insurance for hail, but they can still market their crop to processing, if say it's a Honeycrisp or a fresh apple, how does that work?
Depends. There's a few options with the apple policy. Probably the best option is called a quality endorsement. It allows you to ensure that your apples for fresh blocks meet quality of fancy or better. Okay, so anything that doesn't meet that due to an insured cause of loss is not production account toward a claim. So in that case, if they had that quality endorsement on their policy, nothing's meeting fancy because it all has hail marks, right? So there's potential for it to be completely zeroed out on the claim side, okay, if nothing met fancy, but they could still go sell it as processing and it would not be counted against them at all. But it also comes with a high premium too, right? But these higher value apples and, Walmart, your Kroger or Costco, they're not getting less picky on quality, right? So you need a quality apple out there, and it's a lot of growers that are growing these fresh apples choose to go with that quality endorsement.
So if you have an event, whether it's hail or frost, what does it look like, and how soon do you have to contact your agent after that event?
Should be one of the first calls you make.
Right.
Technically, you should call within 72 hours of noticing any damage occurring. Within a day, once the smoke clears, call your agent, get an adjuster out there. Sometimes the adjuster needs to set immediate eyes on it if it's something that you're going to abandon. But it should really be first or second call as soon as there's an inkling of any damage.
Yeah, in the frost, there's normally not a whole lot to see right away, but as soon as you, in the springtime, when you got moisture in the flower and the buds, and you get something below 29 or below 30 degrees, you have damage starting already. So
you're pretty confident there's going to be damage.
It's an easy phone call to make. It initiates the process. And
absolutely. Yeah, our hands get tied if claims aren't submitted timely. We have standards on, we can't go past this date. There's things called the end of insurance period. There are final dates that you can put in claims for production losses due to, or quality losses. And then revenue losses too. For cherries, there's final dates to put in a revenue loss, even if you don't have a production loss. So best just to keep in close contact with your agent throughout the year. Make sure nothing gets missed.
How do you think that the policies compare for the row crop to specialty crop? Do you think they're treated fairly? Does one policy seem to benefit a certain grower better than the other?
That's a good question. With commodity crops, there are so many acres, right? The risk can be really spread out across all states. It doesn't all sit in one pool in West Michigan like cherries do. So with that, they may get some lower ratings, right, for their premium. There's a lot more pricing availability for commodity crops, right? Through most of the pricing comes from CME, from Chicago Mercantile Exchange for commodity crops. We don't really have a kind of a data warehousing for pricing for all of our or for all of our specialty crops, right? So we don't get the benefit of revenue protection on most of our specialty crops. Cherries are an exception, but we don't have revenue protection for apples, for grapes, for blueberries, for peaches. RMA is starting to come out with a PRH policy, production revenue history policy, that kind of marries them. They piloting it right now on strawberries, fresh market tomatoes, fresh market peppers. If that's successful, then we may be able to get that for some of our crops. But I think the biggest thing is just we don't have, good public pricing data for our specialties. And if we do, it's not a big enough picture to where they put enough trust in it to build all the rates around. So most of our specialty crop policies are just production based at a set price at the beginning of the year.
Mm-hmm. Can you walk through how RMA sets pricing for, I want to say tart cherries? That's the big thing that we grow on our farm. So how does RMA, can you walk through how RMA comes up with the pricing? Is it regional? Is it by state? Is it by different regions and states? And who do they talk to get that number?
So some of that stuff is kind of behind the scenes. RMA has a whole pricing actuarial team that should be doing their due diligence to talk to all the processors in the area, to the ag experts like Extension in that area, and then any marketing groups as well for that commodity. So to come up with, on average, what were processors paying? What's the value of this fruit for that year? If they don't get enough of a response in a certain area, then they may pull in another area into that state as well. So sometimes Michigan's held separate from Wisconsin. Sometimes it's not, right? So it's depends on how much data they can get, but they do reach out to processors and then to like CMI. Yep. And then I know that they've reached out to Extension as well.
Mm-hmm.
In the spirit of comparing things, the new farm bill in the relief package is a little bit unbalanced but sure, it's based on acreage, but specialty crop makes up about 1/3 of the agriculture, but we're only allotted $1 billion of the 12. How does that look to you?
That's a tough one. It was through the bridge program, right? It was to combat unfair trade practices, to help growers with that loss through direct payments. Here just about a week ago, they started coming out with a little more details on the specialty crop side, but again, it's still limited to 1 billion, which I think is incredibly low. Like the Specialty Crop Alliance and a number of organizations are trying to get that increased to 5 billion. There's been some other programs, I think, where specialty crops have benefited more than commodity crops too. We've had the ERP, the QLA, the CFAP, the SDRP, so many different programs. Through a couple of those, they allowed specialty crop growers to collect, 2 to 3 times as much as commodity crop growers on those. But I don't know why this is that severe, where specialty crops only getting 1 billion. That doesn't go very far when you spread it against all those commodities listed that are going to get those direct payments per acre. So, interesting to see what lobbying groups and stuff can do to get that number increased. But that is kind of alarming.
And they have no prediction on or any idea about what that payment would be per acre yet?
Hasn't been released yet. I was looking last night and I haven't seen anything yet. Yeah.
What makes a grower a good candidate for crop insurance?
Ooh, record keeping is very important. For a grower to have a good handle on their production and be able to provide that at a yearly basis. Growers should have crop insurance if they have a perceived risk, right? It's a real risk of crop loss or revenue loss. Being as subsidized as it is, your neighbors are taking the policy, right? So if you choose to not take crop insurance, your neighbors definitely have a leg up on.
The neighbors might be sleeping a little bit easier if you
Correct.
If you don't have crop insurance and you're dealing with Mother Nature, it's like going to Vegas.
Yep, for sure. Yep. So a lot of people can, I think maybe less and less, folks choose to cash insure, right? That can be really risky as well. You can only do that so many years. But when you can use a federal program to kind of hedge against your losses, you're going to come out most of the time ahead. We can go back and look at the loss ratios for the last 30 years for each county and figure out, hey, is it a good, we can backcast things. Is this going to be beneficial based on your history or the area's history? Would you have been better off with this policy? And 99.9% of the time, yes, mainly due to the subsidies that taxpayers are, providing. You can share in 100% of the indemnity, right? But you're only sharing in 30% of the premium associated to that. So all the policies are designed to not be a moneymaker for the government or for the grower. Okay. So they want it to where it just works, but it's not going to be a profit center for the grower. It's not going to be a profit center for the government. So, right. Yeah. And I think they do reviews every 3 to 4 years to make sure that everything's in check.
You're talking to a new individual that's trying to insure their farm. Is it easier to kind of sell it less as an expense to them, to their operation, and more of a business tool in order to keep themselves going?
Sure.
That's an easier way to sell it. Yeah.
And definitely the benefit, it needs to be, grower needs to be getting a good value for what they're paying for, right? So first we talked that premium's definitely important. That's going to be owed. But if there's a net benefit, then that's definitely how we try to kind of spin it. But we need it to be able to work. We definitely talk with growers. Okay, what have been your perils over the last 10 years? And let's look at how crop insurance would have fared in those years, and where would you be today had you had crop insurance for those years?
Does that open a lot of eyes for people?
It does.
Wow, I really should have.
Yeah, and we're getting to the point where
hindsight's 20/20. But
yeah, I think over 85% of the cropland in the U.S. is now insured through federal crop insurance policies. So we rarely come across growers that aren't aware of it. Like as a nation, we probably grow in 3 to 4% a year in policy count. So I think slowly we'll get everybody there. And through most of these government programs like SDRP, ERP, if a grower is going to collect payments on those programs, oftentimes they're required to buy crop insurance for the next 2 years. So yes, the USDA is giving these disaster relief payments, but in turn, the grower now needs to buy into the program. Okay, which I hope that's the direction that the USDA wants to go. When the more people in the program, like I said, the more the risk is spread out, right? The more that the government can budget for, here's our liability out there through federal crop insurance. So if there is a disaster in the Southwest of Michigan, Southwest, wherever, United States, Michigan, at least the government knows a max that they're going to pay out instead of an unknown. Say a hurricane comes and they just start issuing disaster payments. It's hard for them to budget for that.
Just took off.
So yeah, lots of government programs ever since, for the last 10 years, there've been a lot of different ones come out for assistance for growers, which is a good thing when it's needed for sure. But sometimes it'd probably be better spent as increased subsidies on these policies, right? Make the policies cheaper for you guys, more buy-in, then disaster payments may not be as required. So,
in the last 10 years, what's the percentage in the last 10 years that farmers have gotten their ROI on their premium investment?
Ooh, depends on the policy. We've got a lot of growers that take a 50% policy because they just want to be made whole or just want to cover their costs, right? And in a disaster year. And then we've got growers that buy up to an 85% policy. So that triggers much more frequent than a 50% policy. So that's a tough one to say. It's pretty variable depending on crop, depending on area. In terms of, you had a question on the farm bill, right? We are waiting for a new farm bill. They just came out with a farm bill 2.0 verbiage a few days ago. There's a little bit of mention to specialty crop insurance in there. The main thing and the best thing is their RMA is tasked with creating a specialty crop advisory group to RMA. Okay. They've never had that before. They've had one specialty crop person sit on the board. Okay. But that was it. Now they're going to have an advisory committee of 10 people, at least 5 being growers and likely 5 being industry. And then the chairperson of that committee is going to sit on the board. So specialty crop has never had a bigger voice than they're going to if this passes with this advisory committee. So I'm hopeful that Michigan's going to have some representation on there, being the second most diverse growing state. So with reliable access to water. So very excited about that. That's probably the biggest win for specialty crops in terms of insurance through the Farm Bill in a little bit here. So,
you were also recognized for a 40 under 40 winner.
Weren't you too?
No.
Oh, not yet. How old are you? Are you 45? How old are you?
No, I am 31.
No, he's a specialty crop social media star. That's
sir. You were the top 8 or 9.
Star.
What was it? You got recognized recently too.
Yeah, I forget how many people were in that, but that was a Fruit Grower News. Yeah,
I know. I love it.
Yeah.
I think there were 8, and I started following the other 7 too. There's some fascinating growers and influences on there, from potatoes to urban farming. It's great.
So what was that? What was that like? I think you referred to it before as it was a COVID year one. What did you call that? It was almost.
I can't remember. Yeah, the 40 under 40. I think we did a virtual little ceremony there, which was special. Nice. But I appreciated being nominated for that. And every year there's a great group of folks. Still keep in touch with a few other people that were in my kind of award class. Yeah. But it's nice to see. It was good to be a part of. I just like that. Yeah. I mean, everybody, there's growers, there's, industry folks, there's chemical reps, there's educators. Pretty cool thing, but everybody needs to be talking. The specialty crop industry is so small. Mm-hmm. Every segment needs to be, walking hand in hand through all these issues, right? With, scouts are out there seeing new issues. You guys need to be talking to your crop insurance agents. We need to all be communicating a lot more, which it's nice to see a lot of alliances starting, like there's specialty crop farm bill alliance, right? Which is fantastic. That's all spread throughout the country. So they're very involved in developing the farm bill, making sure that specialty crop voices are heard and shown in the paper there. So
good industry.
Yeah.
What's some of the best advice you've gotten in agriculture?
Ooh,
this was not on the questions.
That wasn't on the questions. That's a good question though. I haven't really gotten too much advice. I mean, my biggest takeaways are, I just love working with people who have a passion for the land, for feeding others. It's a really special thing. We wouldn't be here without you guys and without farmers. And not a day goes by that I don't recognize that and appreciate it and want to do my part to help. Right. So it's fascinating. I think it's taken kind of a backseat due to of importance for too long. I think people need to really be grateful for a farmer every single day. I just appreciate to be a small part of that, trying to help protect risks, right? So it's good.
If someone wants to reach out and doesn't have insurance and they would like to start, what's the best way to get in contact with you or Greenstone?
Yeah, so I mean, Greenstone, we've got 30 plus branches throughout the state, and we've got agents that are going to focus on whatever segment, whatever crop you grow, right? So we're in Wisconsin. We even have some Iowa crop policies too. And I'm actually Iowa's having a specialty crop conference next week. So I'm going to fly down to that and meet with a lot of those growers, which is, fascinating.
In Iowa.
In Iowa. Yeah. There's apples growing there. There's a lot of watermelon. And one policy we didn't talk about is called a micro farm policy. And it's like a whole farm revenue protections baby brother. Really works well for a lot of farm market type operations, a lot of urban farm operations. Paperwork is very simple. You don't have to do it by commodity. It's just a dollar amount on what you make. And it can even insure lavender lotion. If you're a lavender farmer, it'll insure the lotion sales. So on that added value stuff. So a lot of these, areas that may have, you can go to any big city and you drive 10 minutes around it. You're going to find a microgreen farmer. You're going to find a small farm markets that are growing 30 or 40 different types of vegetables and making $100,000, $200,000 a year on that. Now they have something available through microfarm, and it's.
What are the restrictions and limitations on microfarm policy?
So you need to file taxes, right? File Schedule F. You need to not grow any illegal substances, right? Other than that, there's not too many restrictions.
Size-wise, though?
Size-wise, up to $350,000 in allowable revenue. That's the limit. For carryover insureds, it's $400,000. A lot of these, single-family farms are going to fit within that. So the whole farm revenue protection, that $17 million is the upper limit on what you can insure for revenue. So yeah, $350,000. A lot of farms fit in that, and Michigan, we've got about 50% of the micro farm policies in the entire nation. So there's a lot of opportunity for the rest of the country to kind of get on board with that. And I think I've got a call with Northeast Michigan growers next week on just micro farm as well. So it's interesting, but we take our job seriously to get out and educate grower groups, because they may never hear of this stuff, right? So I appreciate being able to be on here, and we'll just keep getting out there. But as far as how to find an agent, that RMA website, the agent locator, is fantastic. Of course, I work with Greenstone, but I want the whole program to be successful. Like lots of really good agents out there. We need more people involved in it for sure.
Are there any social medias you'd like to plug before we wrap it up?
Not really, just yours. Yeah. If anybody that's listening isn't following, give it a follow.
Palms and Stones, right?
Yep, and the Specialty Cropcast on everything.
Oh, that's perfect. My daughter's 11, and actually she's got a little company called Lil Lugs. Her name's Lily Rose, so Lil Lugs. So she is selling produce. So work with she finds growers and buys produce wholesale from them, repackages it, and delivers it to people's doors. So she's in her frozen season right now.
Little entrepreneur.
Yeah, so it's really fun. She really enjoys it. Yeah, a good way to get kids into ag. So I definitely want to see more of that in our schools and everything. So
nice. Does anyone else have any other questions for Cory? Is there anything you want to get off your chest before we take away the mic?
There isn't. No, I appreciate being here. But no, there's always constant changes to crop insurance. So my biggest advice to growers is take the time, sit down with your agent, make sure you take accountability, responsibility in making this policy work the best that it can for you. Keep good records. Walk around with your adjuster, learn about what they're doing when they're appraising, get a good feel for it, how everything works. The agent, we can only do so much. We need the grower's involvement. That's when it can really shine and be the best policy when the claim side, the agency side, and the grower all kind of hold up their leg of the three-leg stool. So,
well, cool. If nobody else has anything else, this podcast is available everywhere you get your podcast, as well as Acres TV. We have clips online, on TikTok, and Instagram by the time this comes out.
Everywhere.
So we'll tag you in any clips that I post on those social media platforms. Bruce, thanks for stepping in.
Yeah,
Thanks,
you're
Bruce.
welcome. You're welcome. Thanks for the big notice.
Well, backward hat Steve's gone, so way to
Welcome
bring it
back
up.
from Hawaii.
Oh, that was a while ago. I've been back.
Okay.
All right, well, this has been a great episode. Cory, thank you so much for coming in and talking to us a little bit about yourself and crop insurance, and very valuable. You answered all the questions great. Everyone always worries that they get rambling too much, but you nailed it.
Well, glad to be here. Yeah, appreciate spreading the good word.
Absolutely. Well,
Thank you.
Thanks, everybody. See you in the
Thank
next episode of the Specialty Cropcast.
Perfect.